Whew, let's get right to it. It was an interesting day, like I guess, night of trading last night in early Asian European trading, as we had, as most traders sat around and waited for the release of which it seemed inevitable, the agreement that Greece would receive its next level of aid and everything would go on and we'd have a conclusion to the Greece process for quite some time. Well, that didn't come about. The governments or the finance ministers decided they needed more time to stamp out the details of the plan and will reconvene on Monday to meet. And the initial reaction to this news was that the pound, the initial reaction was that a press convey came out that the meeting was over, and you could see that the pair pushed up to like the 120 area, which had been in resistance. Then it was released that there would be no press conference, and followed by that there had been no decision. And you can see the pair promptly moved down from about the 128.07 level all the way down to its resistance, first level support, at 127.34. But now, after the meeting overnight, we had especially French leaders coming out and saying that it's just a matter of minutes, matter of details, it's verbiage, it's wordage, blah, blah, blah. And there has been a drastic recovery right back to basically the levels we started at 128. And now we're heading into the weekend, weekend trading or the slower trading of Thanksgiving. We could easily just consolidate at this 128 level over between the 128.20, 127.80 level over the next few days. Looking for until Monday, looking for the communique to come out. And if we do get a positive result, we could easily see a pushback up again through this 128.40 back to the 128.25 level, and we could see a push and grind higher over the next week of trading. Now, if we do get some kind of where a deal doesn't get made with the euro, we could easily see the pair shoot right back down. But we could see consolidation here now in the short term, and this does look very bullish. So I would stay away shorting this pair, even though on the short-term charts, let's go down to the 1 hour chart, absolutely had a signal to go short there, and obviously I did not take it because of the rebound. I didn't expect a rebound quite as that. What I was expecting actually was a push down and a rebound up to the 127.80 level for another push back down. So if for some reason we do break back below this 127.80 level, I would take it for a push back down. Let's look at the other majors. The Great Britain JPY continue to move higher for good reason in that pair. The Bank of Japan has come out and reiterated that, the Bank of England came out and said that they would, the minutes came out, and in the minutes it showed that the boards was less supportive of additional quantitative easing, and it looks like the economy is increasing or picking up from the double-dip recession. So now the pair has the possibility to continue its climb higher, and the first target on that climb would be 159.60, followed by the 0.382 fib at 159, basically 160. If we look on the daily here, we can see that 160 would be the target for the first move up, and now we are firmly once again above the 50 fib and the 200-day moving average, which comes out at 158.50, which conveniently enough is exactly where the pair moved down to earlier in the week. So that does look like a very bullish spot for a one-day chart also. So that could be a long opportunity that I would consider. And when we look down on the 1 hour chart, it does look like it is pressing to break out of this resistance zone here at 159.30. The Aussie, on the other hand, we're still short this pair. Well, I'm still short this pair from right about there at 103.76, and the cross has been shuffling around here and there. It did move down with risk, but it hasn't really gained any momentum in either direction. We'll need a break of the 103.50 level to move us back down to 103, which would be 103, and then the total target would be to move down to the 102.50 level. Resistance is up around 103, 104.20 actually. In this pair, it's following it's walking its own step, and it's not. We have seen a decoupling of all pairs moving together. I mean, it's possible for the pound to go up, the euro to go down at the same time. Everything's not moving on general risk on, risk off trends, and that will definitely occur over this lighter trading and over the Thanksgiving weekend. So in this pair, we're just watching for as long as the pair holds below this 103. Let's just say 104. I still favor a move back down lower. The New Zealand pair, if we look on a longer term chart, you can see the part. Well, maybe that's too long. We can see. If we can see that that after the pair moved back up to test resistance here at 82, it has moved down aggressively. First level of support we're going to get here is around 81, followed by 80.50. In this pair, I'm not really entering any trades at the current moment, but we could take a look at it at the 81 level. Now, the other pair of interest are the yen pairs. The yen pairs have continued to move up, even though after it looked like we were going to get a reversal back down after moving to really much higher. As long as this pair, this hourly close at 5 is above 81.85, we still have the potential to move up towards the 83.20 level in the short term. But if we do break back below this 81.85, we could see consolidation and move back towards the 81.60 level. But more interesting is the Euro JPY and the Great Britain JPY, because to see the Great Britain JPY is broke above this resistance zone that it contained the pair not once, twice. And now on the third time it broke higher, and it did break above the 130 level. This break above 130 favors a move, a continuous cycler move back up to the 131.85, 132 level, and that's what we're going to be watching in the short term. Any pullback would be interesting at this level. The pullback towards the 129.60, 130 level, and see if we get a bounce there for a continued move higher. The Euro JPY, as you can see, also is above significant resistance here at 104.80. We get a daily close above this level. That opens the move for a cyclical turn and continued higher towards the 107.50 level. And we'll have to watch those trades in the short term to see if the legs continue into the close. Now we have to keep in mind that the Thanksgiving holiday is going into effect today, and on Friday most traders will be off once again, so we could continue just to drift sideways in these ranges that we have. Like in the euro, we could consolidate in this range again, favoring a move higher though towards the 128, which higher with the resolution of the crisis, and the same with the pound. We could consolidate here at this level, with probably any moves would be tapped, supported by a move down at 159.03. But I would once again favor a move lower. And in the Aussie, with the slowing of the economy and the Merrill report out, we could continue to cycle. We could start to cycle lower in that pair once again. All right, everybody, have a great Thanksgiving. There will be no morning call tomorrow morning due to the fact it's Thanksgiving, and keep your looks out. I'll still be trading. I'll probably be trading on the hourly charts. May scalp today, but I need the right opportunities with all that volatility. The news has been a bitch actually with the euro pairs as of late. Been difficult trading, but that'll all subsidize. You have to take your lumps. Not everything goes straight up. All right, everybody. Happy Thanksgiving. Keep looking on this feed. Remember to keep trades keen and play it safe.